Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator for technology startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we do these free mentoring roundtables week after week after week. This is the 591st roundtable. This has been going on since the fall of 2008, and in any given year, we've been present on Thursday morning Pacific times almost every week, barring a few. So it's been a long journey of working with entrepreneurs all over the world and having the privilege of really seeing what's happening around the world. The event is being recorded. Every single roundtable recording is available on our YouTube channel. On Twitter, we're at 1Mby1M and at Romana. You're very welcome to follow us. It's a very active channel. We publish a lot. We will open up the roundtable for discussions and Q&A a bit later. We do have scheduled programming first. Today, we're going to start with a conversation with Anirudh Damani of Artha Venture Fund in India. Welcome, Anirudh. Great to see you.
Hi, thank you so much for having me here. And amazing work on 591 episodes. This is, that's some true perseverance to get there.
Yes, indeed. So let's get you acquainted with the audience. Tell us a bit about Artha, your background, however you want to introduce the work that you are doing.
No, thank you so much, and for letting me share some of my thoughts about venture building and obviously venture investing. I have had a very interesting journey to becoming a venture capitalist. I started out as a door-to-door salesman in a small town called Midland, and right next to a town called Odessa in West Texas. My first 7 months at the job, I knocked on 100 doors a day, and I was responsible for selling long-term energy power contracts to homeowners in West Texas. After 7 months, I was tasked to set up a commercial energy team, and I think that pretty much was my initiation to business for the first time. So within 5 years, I was managing close to 500 people in sales, door-to-door commercial sales across the US. And I turned entrepreneur towards the end of 2009 when the business I was working in got strapped for cash during the Great Recession. Ran the business for 3 years with a couple of friends who were also my partners. And then I sold that my portion of the business in 2012, moved back to India with the sole intent of creating something in infrastructure within India. However, when I got to India, it was a very different world than what you see as India today. So I had a very tough time getting started in India, and the best they say the best ventures are built out of a personal pain point, and I started investing in startups because my pain point was how to do business in India. So over the course of the next 8 years, I built out a portfolio of almost 70 startups. Many of them have become household names in India and globally. And then we set up this venture capital fund in 2019. At the time, it was India's first micro VC fund. And we went out to raise actually 15 million. We ended up raising 33 million. And now that journey is becoming much larger. We're about to launch our second fund, which will be probably double the size of the last one, to continue investing in the winners of the first portfolio. So it's been a great journey. Like I said, we've had fantastic stories, and I'm sure I'll get a chance to share some of them today. And looking forward to sharing with the 1 million group.
So let's talk about a bit of the fund positioning. What do you like to invest in? Is it B2B, B2C, both? What's your sweet spot?
So usually I don't look at investing in sectors where we invest. So when we're looking at it as a venture fund, we are currently investing in 3 specific themes, and we are towards the end of that theme right now. What the three themes we were investing in was direct to consumer, which in India has taken off in a big way. The second theme, which was a 30% allocation for the last 4 years, is direct to consumer enablers. And the fourth theme has been B2B SaaS. And B2B SaaS has been a feature of my last 10 years. If you look at the over 107 startups where we are invested, probably 40% of the portfolio has been B2B SaaS. Now, we usually come into a company at what I would call seed plus, like a late seed kind of a stage, and we invest anywhere between 200,000 to 600,000 in an early seed or a late seed round, but we have allocations to double down on the same companies all the way up to Series A. So 70% of our fund has been allocated for follow-on investing, and that feature has really helped us, maximize our position and our investment into firms that are doing very well and startups that are doing very well. And then the founders also have a lot of security, knowing that they don't have to keep going out to market to raise further funds. As long as the metrics and as long as things are going well, they have an investor who can probably go on to invest $3 million across 3 rounds into their company.
Let's double click down a little bit on the stage. So follow on, I understand, but when you write your first check into a deal, what do you want to see by way of metrics? So it's a late seed, which means you are asking to see metrics. And what are those metrics in B2C? What are those metrics in B2B SaaS?
So usually we want to see at least about $10,000 a month in revenues. We want to see a build out of the team. We want to see a product that is beyond the MVP stage, obviously, because we're looking at actual sales. And the sales, one of the things we also look at qualitatively is what is the kind of sales you're getting. Because you start the business with a thought process that I'm going to cater to a certain class of customer in a certain geography or in a certain hierarchy, right? However, what the sales data tells you, right? It tells you exactly who your customers are. So we want that kind of validation coming in from your sales data, and that's usually the time when we start getting invested into a company. That's why I call it seed plus, because it's beyond just being an idea. It's beyond just being a product. We're saying, okay, tell us who your first early customers are. Tell us how are they referring other customers. Tell us how they're using your platform, whether it is SaaS, whether it is a direct to consumer platform. A lot of data can get validated by looking at the kind of sales you're getting and the repeat rate from those customers.
And geographically, these are all India-born companies?
So yeah, I would say out of the 27 we've done from the fund, 26 are domiciled in India. One is domiciled in the US, but it's primarily an India business selling to the world. In terms of sales, however, I would say about 25% of our portfolio sales happen outside the country. But yeah, most of the companies are based in India.
So I assume the B2B SaaS strategy is global SaaS companies born in India or operating primarily out of India, but global.
Absolutely. In fact, I think most of those 25% of the sales, and majority of that is probably dominated by companies that are B2B SaaS companies selling to the world. However, what's been interesting is also on the direct to consumer front, we've had a couple of brands that are now getting orders from the US. They're getting orders from Europe. In fact, one of our edtech platforms called Hopspace, which teaches chess online, is probably the world's #1 platform for learning chess online for children. They derive 80% of their sales overseas, and it's a direct 1:1 coaching that they're doing. So we're seeing some early traction in those kind of plays, and it's fairly interesting. But again, like I said, probably 80% of our global sales in the portfolio are coming from the B2B SaaS platforms.
Okay, so let's do a few case studies of companies that you have invested in, and as you were talking about them, talk about how you encountered them, in what stage, and what is it about them that convinced you to write that first check. And I want to start with your pre-Artha Fund days when you were doing just pure angel investment. what kind of companies were you investing in, and what was that early experience like? And the reason I want to go there is because I want to, with your commentary, I want to trace a little bit of the journey of the Indian venture capital world as well, and the startup
Oh,
world.
that's such an interesting question, and I love the way you framed it. Uh, so let me first tell you that I went to college to study computer science, and after my first 2 semesters, realized I wasn't built to write code. So I'm in no ways a techie. And obviously, most of the businesses I've invested in, they're all tech-enabled startups. So one thing I've always believed in is that since I don't understand the technology side, I always seek from the entrepreneur or the founder, uh, their brilliance in taking a very complex concept and making it very easy for me to understand. I think that's filter number one for me. Because
Mm-hmm.
if a founder cannot explain their business to me within 5 minutes, right, I believe that usually that founder probably doesn't understand the business himself or herself, right? And that's why I think it's very important for me when I'm looking at any founder, right? What is the actual business that you're in, right? And I think for example, when you look at McDonald's, many people believe it's a foods business, but it's actually a real estate business, right? And so on and so forth, right? Who's the real customer that you're going after? So, a very good example for me, probably the way we invested in I think probably India's first decathlon at the time, Oyo Rooms. I'm the first round investor in that company. Um, and when I met Ritesh, he was 18 years old. He had dropped out of college, and go back to 2012. Dropping out of college in India was a big taboo, right? Parents were not okay
Wow.
with their children dropping out. Things have changed 10 years later, but at the time, dropping out of college so you could start a business was just never heard of. However, what he was really trying to build was, he was saying that, listen, there's this platform called Airbnb. It's doing extremely well in India and overseas. But what's happening is that when somebody who's coming from a business background is a salesperson who needs to frequently travel, and he wants a standardized experience across India, right? It's a very difficult experience to find, right? So in what I mean by that, a two-star hotel, like what you would have like an Econo Lodge in the US or a Motel 6, that experience in India is broken, right? Because what constitutes maybe a two-star property in Bombay would look like very different from a two-star property in Delhi, and very different from a two-star property in Calcutta, or very different from a two-star property in Bangalore. So what he
Mm-hmm.
wanted to do initially was to take the homestay experience and standardize that for corporates across India, right? And he was very successful in doing that for the first 6 months, and then found a bigger niche, which was to actually go after the two-star hotel space and start standardizing, independently run hotels by branding them as Oyo rooms, and effectively coming up with a very simple thesis saying, you know what, I'm only going to provide you with a clean room with free breakfast and free Wi-Fi. And those are the three premises that I promise. Everything else is a plus plus. And, I coming from a background, and this is where I think when you become a venture capitalist, or even when you become a founder, you realize the value of experience, right? Because I used to be on the road, probably 25 days out of the month. I've lived in a lot of econo lodges. I've lived in a lot of Motel 6s, right? I've lived a lot of days in and comfort inns and La Quintas across the length and breadth of the US. So I
Yeah.
understand the value and the kind of effort it took to standardize that experience across the board, and why
Yeah.
that really matters to corporates. And I believe when I was looking at the deal, I could understand what he was doing, because much of my staff at the time was having tough experiences, especially the females, right? Where they would go to Delhi, and we would get them a business hotel, which was supposed to be business hotel, but it would be right next to a fairly shady area, right? Or there was fairly shady activities going on in the hotel. There was no standardization. But the same hotel or similar hotel in Bangalore, uh, and at the same similar price point, would be a fantastic hotel. So it's a very
Mm-hmm.
difficult thing for an administrative team to know that you're going to get a standardized experience across India. Oyo did that, right? Oyo did that, and it solved a massive need. It took off, not just in India, it took off globally, right? It went on to become pretty big in China, in Japan, and we saw almost a 300x multiple on that deal in less than 4 years. simply because he solved such a huge market need with a very simple premise, and focused on being tech enabled versus tech first. And today, what you see, I mean, at least our experience with Oyo has been that is a top performing investment until now.
Mhm. And so the concept and the idea resonated with you really well because of your experience. Is there something in the founder that speaks to you? Of course, this sounds like it was a deal, at a concept stage deal in 2012. This is not what you're doing now. Now
It's a
more
very different
revenue.
ecosystem, right? Yeah. So one of the things that we also found in this in Ritesh was he's tough as nails. He's very driven, very focused, and at the age of 18, he has such confidence sitting in front of 15, 16 angel investors, all seasoned professionals, and business owners themselves. The way he carried himself, the way he was willing to negotiate, right? And really, his focus wasn't valuation when he came to us. His focus was, I need this money because I need to get from point A to point B. And the only way to do that is I need this capital, right? And I think that showed a lot of maturity very early. And if you look at the kind of rounds he raised and the kind of investors he stitched together, he had Lightspeed, that invested right after us. Then there was Sequoia, then there was GCP, there was SoftBank, and a host of other investors that kept coming in. He was able to keep stitching these rounds together, but also keep all his investors happy, convinced, and backing him all the way through. And for somebody who had not been to college, even today, Ritesh would be what, 28 years old. In the last 10 years, a guy with that little experience, right, in and being able to manage such a complex number of transactions and investors, hats off to him.
Yeah.
Now, what's
So,
changed today, I would say, is that we're no longer investing in concept stage companies, right? We're getting, because the ecosystem in India has matured, right? There are now
yeah,
second time and third time founders coming up. There are more professional. The average age of the Indian founder has also increased,
yeah.
because people that are even at vice president or later roles or higher roles in their companies are willing to quit because they're bit by the entrepreneurial bug. That did not happen 10 years ago. That's happening now, and that, I think, that's why you're seeing a much more different kind of an approach towards investing than what we were doing 10 years earlier.
So let me lay out for our audience a little bit of the evolution of the Indian industry, which is actually not very different, although it's coming later in the cycle than what we have seen in the US, is a, a stratification of the different stages of investment. In the beginning, the period that you're talking about, 2010 to 12, 13, even 14, I would say, it was basically one small set of investors who were doing everything. But today there are, angel investors doing pre-seed, seed, and, micro VCs doing pre-seed, seed, post-seed, pre-series A, and then the larger VCs, the more traditional VCs, are doing Series A onwards. So there is a whole class of both angel investors as well as small VC funds that have evolved who have chosen what stage they want to play in and how much risk they want to take. And none of that infrastructure existed until maybe a few years ago. It started existing, and now it is actually fairly mature in that you do see more positioned funds on specific types of investments. So today you are positioning Artha in a much later stage, not late stage, it's later stage of the early stage development. So it's the revenue
Absolutely.
stage. Yeah. So let's talk about Artha. You have made 27 investments. So let's talk about some of the Artha case studies.
So from the fund, I would, let me take you maybe through the case study for, we could look at hop space, right? So all 27 deals we've done at Artha Venture Fund are all deals referred to us. That's an additional filter I've been able to add over the last 3 to 4 years, which is, we're getting so much deal flow these days that it's very difficult for my team to keep up, even with the best ERPs and systems that we're using. there's just too much deal flow coming our way. So when we added a filter which said every investment we do that comes into us, we only take a look at the deck if it is referred by somebody in our network, either a founder or a co-investor that refers the deal to us. So Hopspace came to me through one of the IC members. Very interesting deal. They were initially pre-pandemic. They were looking at building in India. We've got these class-led gyms called Cult. They've become very popular. They were almost at a unicorn valuation and then got acquired by India's largest conglomerate called Tata's. And now their CEO is heading the Tata digital platform across India. So what Priya and her team were trying to do, Priya, Harsh, and Bhaskar, were that they were trying to build a cult, but for kids. So they're saying, can we put all classes under one roof, and the parent doesn't have to go from place to place to be able to ferry.
We are losing part of your. We're losing part of your audio. I'm not sure what's happening.
Can you hear me now?
Yeah.
Okay. So where did I get cut off? Should I restart?
You were talking about Hubspace.
Hubspace, yeah. So like I said, this deal was referred to us by our investment committee member Ramakant, who's now the founder of a unicorn called LiveSpace, based out of India. What the company initially did was they're trying to build all classes for children under one roof, right? And so the parent would not have to go ferry a child from different classes, like from a chess class to a dance class or something like that, because they can all be in different places, and India has a huge traffic problem. So what they would do is they would go to a school, say after you're done at 4 p.m., why don't we use your facilities and we'll create all classes for you under one roof, and a parent can test out different classes with their child and then decide to sign up for one for a longer duration, right? That was what they wanted to do initially. They had a number of schools that were signed up, and then the pandemic hit us in March of 2020. The business went through a tremendous change. They had to go quickly think about going from offline to online classes.
Right.
They tried doing the online marketplace model. I thought the idea was very interesting because I have a lot of friends who have children, and I see how they have to ferry their children from place to place, and it's in India sometimes going 10 kilometers can take an hour. So that definitely was a pain point to solve, and also parents want their children to be exposed to a number of activities before they decide what they really want to take up. So this was really solving a huge market need. Priya and her team were very, very motivated. We led about a $250,000 seed round into them. And during the pandemic, after the entire business got wiped out, we had several conversations on the pivots they had to do. They decided to go for an online marketplace. For the first 7-8 months in India, there was a bunch of educational platforms that took off. So the customer acquisition cost just kept skyrocketing. It got to a point where there was no possibility that the kind of CAC that Hopspace was paying was going to get covered by the LTV of that customer, right? And customers were also shopping around because every platform was willing to burn capital to get a customer. But one of the things we do with our founders, and this is a very common trait you'll find through Artha companies, is we speak to them and track their numbers on a weekly basis, right? So one of the numbers that we were tracking, and the tracking is not for us, but it's more for the founder to realize, what's happening in the business, right? One of the things they realized was they were never going to make money. They would burn through this entire $250,000 if they did not pivot into something that was more sustainable. And through this data that they were collecting, they realized, chess was a game where they actually had a very strong LTV CAC ratio. Well, everywhere else they were below 1. The LTV CAC here was 3 to 4x. And that's when they pivoted, with our, obviously they needed assurance that, would Artha and other investors back it? And we said, listen, you focus on chess, you become number one in chess, you really own that category, we'll write a follow-on check into you. And I think that motivation also helped them to pivot to chess as a full-time activity. Today they are doing almost $500,000 a month in revenue, and they're growing their platform about 20% month on month, simply because they've become the de facto platform for chess, with 80% of the revenues coming from UK and US. What I believe really helped the company was that because they were tracking the numbers so minutely, they were really trying to understand how can we create a growing business that is also sustainable. They were able to get into one category. We just did their Series A round about 6 months ago, and they're now valued at a $25 million valuation. So the company's done very well, and we're very happy for the future prospects.
Anirudh, this example that you gave of a B2C venture out of India that is doing global business, how common is that across your portfolio?
I would say probably 1 out of 5 businesses is which is on the B2C side is either looking overseas or also getting inbound interest from overseas locations. And I think
primarily in ed tech, or is there a category trend in there?
I have seen it in Ayurvedic companies. We're investors in an online astrology platform a lot, and I think what's really helping is that the Indian diaspora, right, across the world, Indians are spread across the world. We're, in all countries of Europe. We're all across Southeast Asia. Obviously, US, we do very well as a minority. I think that has really helped many of these platforms scale overseas. Because for example, if you're looking at HubSpace, right, the Indian parents are very comfortable because most of the tutors are Indian. When you look at InstaAstro, right, astrology is a big part of the life of an Indian, and normally astrologers are very difficult to find. They're very difficult to book times with, and here comes a platform that allows you to book it as you would book somebody for a haircut, right? Just as simple as that. And I think that those kind of things have really helped build their offline presence, or sorry, the overseas presence for B2C businesses. And now that the Indians over there are using it, and they're usually very influential people in their neck of the world. There's also South Asians using it, and then it's also percolating down to the the ethnic population also using these kind of platforms.
And what are some of your experiences in B2B SaaS?
Several. So our leading investment in B2B SaaS today is a company called Exotel. Exotel is a cloud telephony provider. They basically, you could say that they are the Twilio of India. So this is a company where we are a seed investor since 2012. They took 7 years. So before I get there, let me tell you that this also was a company I chose simply because there was a personal pain point. Setting up an EPBX ecosystem in India in 2012 was very complicated and very expensive in India at the time. And Exotel basically would provide you a virtual number and create the logic flow for your communication strategy in less than a day, right? Just plug and play. And that was a game changer, especially for early stage startups that did not have the bandwidth, the time, and the money to be able to set up physical phone infrastructures, right? And so this was the first company that allowed you to receive phone calls from a board line onto your cell phone directly.
Okay.
And it would record the call and also start adding logic on top. This company also reminded me of the cloud telephony provider I was using when I was an entrepreneur in the US. And so it was a very quick understanding of what the company could do. And I got closely associated with the entrepreneur, helped, in many ways to also pitch this to other startups, especially the startups where we were investing. We always pitched their product as the product for cloud telephony. Took 7 years to raise a follow-on round, right? What was brilliant about the business was that they were solving such a huge market need on the B2B SaaS side. They did not need copious amounts of capital to run operations. They only raised, I think at the time it was something like $300,000, right? And they did not raise any money for 7 years after that. They raised the next round straight at a $25 million valuation in 2019, and now they are valued somewhere close to $350 million. But what's very exciting is the founder, even at this valuation, at this Series D valuation, owns, I think, close to 45-50% of the company. Because they literally, what he's been able to do is that he's been able to grow by using customer capital versus venture capital, right? So he's been able to save dilution. He's built a very sustainable, very profitable business, They are almost a 100 million ARR company today, and a market leader. Everybody knows who Exitel is in India, and they've then grown that business and taken it to Southeast Asia, right? And they provide their cloud telephony services in Indonesia, and they're providing it in the UAE, and so on and so forth, right? Very interesting business. I mean, definitely you know our bellwether, if you would call that, in the B2B SaaS side. And we always compare other B2B businesses and how to scale that with the way, Exitel has scaled over the last decade in our portfolio.
I have a number of questions based on what you said. How much are you seeing penetration of Indian companies, especially the B2B SaaS companies, into Southeast Asia? I mean, Indonesia is a very big market. Is that turning out to be a big market for actually not just B2B, B2B and B2C in Indonesia is a very big consumer market too.
Definitely. I think, and probably more SaaS gets there before I think B2C gets there. And I also believe, the way India is structured, right? If you take a 30-minute flight in India, by the time you land, you will see a change in the way people dress, in the way people talk, in the business culture. You'll see a massive difference on every 30-minute flight, right? So which means that when you're building a B2B SaaS platform for India, you're not building it for one country. You're building it actually for 30 odd countries, right? And then because even the way we write changes from state to state to state, right? We don't write with the same. The common language of those states is not even similar between what happens in Punjab and what the way we write maybe in Tamil Nadu. But when a platform like that scales across India, it gets very robust because it has to take on multiple. It has to be dynamic enough to cater to the local audience and also the operator that is managing the software. So it becomes very robust scaling across India. However, India continues to be a very price conscious market. So India is not usually the place where you come to have massive profits. You get massive scale, but you may not get massive profits. However, when you develop a robust business with a low cost base, because you are looking at India as your market, when you go overseas, and I've seen this both businesses scaling in Africa, the African continent, or Southeast Asia. Here are two parts of the world, probably holding somewhere close to 2 billion plus people that are willing to pay much higher amounts on an ARPU basis than what you would be charging in India. In some cases, I've seen there's willingness to pay 4 times more than what's being paid in India, but your cost base continues to be in India. So therefore, it's very profitable for a business to scale in India, get robust in India, and then go overseas and sell to those markets, because they'll still be undercutting the competition out there, but be massively profitable because their cost base was learned and built in India. So that's the reason why a lot of these platforms are moving or are looking at Southeast Asia. They are looking at Africa. They are looking at Europe. Because their cost-based structures are set, and they see massive, increase on a revenue per unit basis just by being overseas.
Well, the India Silicon Valley tie has been very strong for a long time and has strengthened over the years. So we do see a lot of the companies starting in India and then setting up a headquarters in San Francisco or the Bay Area and then going after the US market. But I'm actually very interested in what you're saying in what's happening with Indian companies selling into Africa, Indian companies selling into Southeast Asia, because they are underserved markets. The profit level is not going to be as much as the US, but the US market is also very competitive, whereas those markets are actually virgin markets where the competition is much lower. The customer acquisition cost is lower, Facebook advertising, Google advertising is much more reasonably priced. So it makes a lot of sense for a lot of Indian startups to go into those markets. And I think you're saying that it is starting to happen more.
Absolutely. And I think all the points you made, they're so valid. I also think there's a much stronger cultural connect with the African subcontinent. Indians have been there for several generations now. And I think also because we're a very strong English speaking population, there is a much better, connection with those markets. Also, it helps that we are
Yeah.
probably much closer to them in terms of time zone, right? You're talking between Silicon Valley and Singapore, the time zones can be fairly wide.
Yeah.
So I think all of those things help the India cause. Also, if you think about it, dollar has rallied against global currency. So if you're billing in dollars and that to US dollars, right? Usually, as the currency depreciates, the cost for many of these companies in these areas keeps on increasing, right? And when you're looking at an India cost base, because as we depreciate, our revenues go up. We can probably maintain the same price or even lower it as and be more competitive because we come from a lower from a market that is not dollar based; it's rupee based.
Yeah. And the other question I have is about the rest of India, right? So we know that Bangalore has developed very well. We know NCR, Delhi NCR has developed very well. Mumbai, Pune, Hyderabad, Chennai, all these have developed well. What are you seeing in your deal flow on ventures from the rest of India?
It's been a very exciting market. So one of the key things in India, and we just completed our first investment in the state of Uttarakhand, right? A company based out of Dehradun that is bringing B2C products that from its local region, right? The Uttarakhand is known for its pulses, and it's a lot of their herbs have medicinal value as well. So we just invested in a company there. We're invested in the largest, startup hotel chain in multi-brand chain across the northeast called Chai Break. So we are very active in that ecosystem. I think the best values obviously come where people aren't looking. So most of our portfolio is concentrated across the north. A lot of companies are in Delhi and neighboring markets, and the northeast. We've done a number of investments even in Bombay and surrounding areas, but Bangalore, obviously we have investments there, but I would say probably 25% of our portfolio is in Bangalore, which is, we've always been looking for value where nobody else is seeing it at the moment, right? So we always want to keep running to where the football is going to be rather than where it is today. And that's helped us, build out a fairly diverse portfolio across the subcontinent.
Last question. You said earlier that the deal flow has exploded and you have introduced an additional filter of referrals. Now, if you don't use the referral filter, what is the size of the deal flow right now?
Oh boy, it'd probably be about 100+ deals a week if I don't use that filter. And probably close to 200 deals a week. 100 was what we were doing before we brought in the filter. So
you're seeing about 10,000 deals a year.
Easily.
How many startups do you think are operating in India right now?
Probably close to, I think, 10, 12,000, probably a little bit more.
Okay. All right. Interesting. Very interesting benchmarks. We've been doing the
And again, I'm counting as a startup, probably something that has been funded or is bootstrapped to a certain level, right?
Yeah. We've been doing the Indian startup ecosystem for a long time now. I've been working on I did the first company in the Indian startup ecosystem when there was no Indian startup ecosystem, but it started to come together in the late 2000s. So it's been a very robust growth of the Indian startup ecosystem.
My team says that I must be corrected right now. So the government of India has its own database of startups, and as per that database, there are 77,000 registered startups in India. So that's a pretty decently big number across 656 districts of India. 77,000, off by a factor of 83%. So 77,000.
Very cool. Well, Anirudh, it's been a great pleasure speaking with you and catching up on the Indian ecosystem. We will continue the conversation later. Thank you for coming today.
Thank you so much, and great conversation. Please keep this show going. 591, 600 around the way, and looking forward to staying in touch.
Take care. Bye.
Bye.
All right, folks, we're going to switch to the entrepreneur pitch session. Remember, this is a safe working session. You don't need to be nervous. You don't need to be defensive. We are on your side, and we will try to help you with whatever issues you're working with. If you disagree with my feedback, that's okay. It's your venture. You will run it the way you please. But listen, because obviously feedback comes with experience, and it's generally unsugar-coated feedback that is going to be constructive critique of what you're doing. So Puneet, Wast-e-collector. Please unmute your line.
Hi, can you hear me, Salmana?
Yes, perfect. Go ahead.
So, should I start or how is it going to be?
Please start.
Okay, thank you so much for giving me this opportunity. My name is Puneet Agarwal, and I'm here to present my topic on Wast-e-collector. British poet W.H. Auden once noted, "Thousands have lived without love, not one without water." As population have grown and natural environments become degraded, ensuring everyone has safe and sufficient water supplies is becoming increasingly challenging for all of us. Industry in many areas still discharges waste directly into watercourses. As per the United Nations 2021 report, 60% of water bodies assessed in 89. Please continue with the same slide. Yes. Still continues to discharge their to discharge their waste into the water bodies. The greatest increase in exposure to pollutants are expected to occur in low and middle income countries, primarily because of higher population and income growth in these countries, especially those in Africa and Asia. A major part of the solution lies in producing less pollution and improving the way we manage wastewater. Industry and agriculture are often big water polluters, and therefore these problems need to be addressed. Increased usage of chemical fertilizers and pesticides, disposal of the waste products directly into the drainage systems, polluted groundwater and surface water are increasingly become a critical challenge for managing the whole water-based systems. One critical factor here to note is the water quality data are not collected routinely in most of these countries. This means that over 3 billion people are at risk because of the health in the quality of these water systems. Next slide, please. We aim to address this issue by becoming a technology company that uses an IoT-enabled Waste-e-collector, which is a smart net that collects all the waste material existing from the drainage pipes for up to 50 kgs. The product has basically three main features. First, a high load bearing mesh net that is designed to suit for heavy duty purpose and ultra durable. So once it is installed in these drainage pipes, it can last for a significant period of time. However, the most critical aspect of this product is connection with sensors that records the water quality and the storage capacity. Once this weight capacity is reached, it sends a signal that weight capacity of the mesh has been reached and a transport vehicle is sent to the site where this net is installed. In addition, the sensor installed in this net also records the water quality every 24 hours that becomes a reference point to study the improvement in water quality levels over the time. Next slide, please. Our strategy is aimed to be for sustainable growth over the next 3 years, where we want to prioritize awareness of the usage of this product amongst the government and industries, and expand the assembly line of the production, and develop a supply chain of the management in the first year. Over the next few years, then we want to expand this supply chain across India and set up as many as installations across the country. This is likely to create large volume of data about the water quality levels in different parts of the country and the volume of waste entering into the water streams. This will push the stakeholders to take collective measures to improve the quality of the water bodies. Next slide, please. The business model is designed in such a way that revenue generation can be done through three streams mainly. The data is collected from these IoT devices can be sold to many of these industries who are looking to find the current levels of water quality and how and where what kind of industries are located. Secondly, the waste that is collected will be segregated into primarily two parts. First part will be what kind of waste can be used to produce waste to energy production. We have seen in recent times many of waste to energy plants have been developing in the area of northwestern region of India. We are going to target such customers who are investing in setting up of these plants and targeting a supply chain to sell the waste that can be converted into these energy sources to such plants. Another source of customers that we want to target is who are basically manufacturing clothes or road products by recycling the waste materials. The Chief Minister, sorry, the Honorable Transport Minister of India, Mr. Gadkari, has been focusing a lot in past few years on using these sort of waste materials in construction of roads, where and so that roads can become more in a can be constructed in a more sustainable manner. Those are the kind of customers we are going to target where the waste material that is collected can be used in this recyclable journey. We seek support in terms of mentorship to launch this unique and essential project that can be revolutionary measure in reducing the number of deaths every year due to poor water quality and loss of billions of dollars in the economic losses of the nations. Thank you.
Puneet, have you done an assessment of what does it take to get something launched? You know, what we call in the industry parlance, minimum viable product. What can you start with? What can you get started with? And what kind of money do you need to get that going?
Good question. My assessment of MVP should be in this manner is something like 10 lakh rupees at this stage, where my objective is to the typical cost of this particular mesh is something around 250 rupees uh, per square feet, and to be able to construct to install those many number of installations across, let's say if I'm targeting a state called Rajasthan, right? Uh, I need to be installing across maybe at least 100 locations in first few months, and that would require me this kind of capital to be able to install and also create a supply chain of people who will be basically collecting these materials. So what I'm also planning to do is there are a lot of what recently we have seen that the Prime Minister drive for reducing collecting waste and across the country, there are a lot of supply chain have been set up. I'm going to take support of these supply chain to tell them that these are my waste collection points and use the supply chain to collect the data and keep in a warehouse or kind of a collection point where all these waste materials will be collected. Now, the second challenge would be for me to segregate this waste into two categories, as I mentioned, for and ensure that these
Okay,
waste
Puneet,
materials.
I got
Yes.
it. So,
Yeah.
so let's just stay focused on how to validate this business and so forth. So first and foremost, 1 million by 1 million may not be the right place for you because we do mostly IT and IT only, IT and IT enabled services, whereas yours is more of a, you know, it's a different kind of business. But my advice to you is that you're going to have to figure out how to get this business off the ground in a bootstrap manner, and whatever cash you need to get it off the ground has to be amassed through your friends and family network. So that is the standard practice in the startup world in general. Whichever sector you're working with, the startup world in general is going to want to see a validated business. So whatever is the smallest amount of money that you need to get to some level of validation, I would encourage you to start thinking about that. Is that what is what do you need to pull together to be able to validate your business, to create models of how this business is going to scale and so forth. And whatever money you need has to be raised from friends and family at this stage of the business. Concept stage businesses don't get funded.
I understand.
Not anymore. What we were talking about earlier, you listened to the conversation with Anirudh. He was talking about 2012 when concept stage businesses did get funded by first-time entrepreneurs. Now, if you are looking to fund a concept stage business, most likely you have to be a second or third-time entrepreneur. Otherwise, it's all businesses that are getting funded, and the number of businesses that are bootstrapping to validation and then going out to raise money is very, very high. So that's the track you have to take. You have to bootstrap first and then raise money later.
At what level you would recommend me that my business can get validation? At what stage I should feel that this is a point that the business is getting validated now, and then I should go for funding?
Well, you haven't said anything about what is the business model, how does this business make money? I mean, you call this business model, but where is the business model? Where is the monetization model? How much, who is paying how much to build this business? None of that is clear from your pitch. Your pitch doesn't work. So you first and foremost, you need to create a pitch that investors can work with.
Okay.
So this is not an investor pitch. This is not a pitch that will suffice for investors.
Okay.
In terms of resource pointer, if you hang on, I will walk you through what resources people can use in the audience to from the 1Mby1M portal, or community, but with the caveat that this is specifically geared towards the IT and IT-enabled services businesses, not necessarily. A lot of concepts will work even in your business, so you can start, trying to learn from these resources if you feel like it. But you will need to find a body of learning material that will help you, plug your own knowledge gaps.
All right. Okay. Thank you so much for this information. Thank you.
Let me explain to you what we have, and then you can see if that's what you want. So everything is at 1Mby1M.com. You will find a blog that you can start reading that's available for free, and then there is the Entrepreneur Journeys book series that you can start learning with as well. This is a collection of case study-based books that are available on Amazon. These roundtables happen every week. You can come as many times as you want to and follow these discussions, and you'll learn a lot from them. You can pitch once for free. After that, if you want ongoing help and coaching, you will need to join the premium program, where we provide extensive methodology guidance. You get access to the 1M curriculum, which is over 3,000 hours worth of curriculum, but it's organized very well. So you can go into specific modules that you want to learn, and you can learn, very efficiently from case studies. We do help you with business development where we have contacts, and in a format like this, every week we have strategy roundtables where we do provide you with project-based guidance. And we work with hundreds, actually thousands of investors, and we help you with financing as well. You do need to be fundable to be sent to investors, and that's the process. You have to get through and plug all the gaps. There's a whole process in that. The self-assessment tool that you have on your screen right now is available on the website as a free tool. You can take your venture through that and understand what kinds of due diligence questions you're going to get from VCs. There's a bootstrapping course on the blog pinned to the top that you can go through. It's about a 1-hour course, and hundreds of thousands of people have done this course. So I strongly recommend you take a look at that. On Udemy, we have about 30 courses. So you can start learning the 1M1M methodology at a very, very low price point by signing up for the Udemy courses as well. So go check out on Udemy my courses, and that's another way to start learning. You can also access the curriculum only on our website by joining 1M by1M Basic. That is the curriculum only option at $99 a month, very affordable. And we have the entire curriculum available there. So go dig around, look at all the different options and see what works for you. You learn whatever way works for you. We provide you with these resources, but you have to do the work. The learning work is yours to do. The curriculum is case study based. It's described in a lot of detail on the website, so take a look. We have worked with thousands of entrepreneurs and collected their case studies and put them together in a very efficient way so that you can learn from people who have done it before. And that is our whole differentiated way of teaching, is case study based teaching. The investor introduction policy is something you should take a look at if you're looking to raise money. We lay out very clearly what you need to think about in investor introductions. Our methodology is bootstrap first, raise money later. And our mantra is do not go to investors as beggars, go as kings. The lower the amount of validation, the more you're begging for money, and we don't like that. That is all. We have, one more roundtable in September and 4 in October, so we have plenty of roundtables this fall. That is all for today. If you have questions, I'll take questions from the audience now. And let me also introduce you to Irina Patterson. You can talk to her and ask questions about the program if you have questions. Saubik Brahma, you seem to have registered to pitch, but you did not send in the slides. So I suggest you work with Maureen, send her the slides, and she can schedule you next week. Okay? Do you want to ask any questions, Saubik, before we adjourn? If you want to pitch, you would need to send in your slides ahead of time. All right. I don't see any other hands up, so I will adjourn for today, and I will see you next week. Thank you for coming. Bye.
Thank you so much. Thank you. Have a wonderful day.
Bye-bye.